Hey, what's happening? Today is Thursday, and it's time for the Redfin housing market update. So, this was a big update, and I tried to do it earlier today, but technical difficulties. So, I had to reset for this evening. So, if you are joining me right now, thank you so much. If you're watching this later on, I really appreciate it. My name is Jason Ferrier, and I'm a local real estate agent and investor here in Central Ohio, just outside of Columbus, Ohio. And I'm excited to show you this update because there's a lot going on in the housing market. There always is, but we set a couple records, and it's just a completely crazy time right now. So you'll see that here in a second. All right, let's get right to it. So remember, all this data is national data. Obviously, analyze in your own subdivision. Don't just use the overall national data as gospel. You want to definitely go to a local level, and you can do that on Zillow. You can even do it on places even like Redfin. You don't have to have access to the MLS to do that, and there are actually softwares out there like Propstream.com that can help you do it too. But in any case, make sure you're working with a realtor if you need to. And analyzing exactly what's happening down to your maybe even street level. So let's get to the update though for Redfin, because this is definitely newsworthy. All right. So the update, name of this update is Housing Market Update. Buying a home costs more than ever, with prices hitting an all-time high and mortgage rates rising. The median U.S. home price rose 5.2% year over year this week, and mortgage rates hit their highest level since November 2023. Prices continue to rise, partly because there are still serious buyers searching for homes. The median U.S. home price sale, the median U.S. sale price hit a record of $383,725 during the 4 weeks ending April 21st, up 5.2% from a year earlier, one of the biggest jumps since October of 2022. The average mortgage rate hit 7.1% this week. It's the highest level since November of 2023, and it's became clear the Fed would keep interest rates higher for longer than expected. High prices and mortgage rates drove the median monthly housing payment to a record $2,843, up 13% year over year. So that is crazy, right? Now we've hit a record with prices. So prices now, and you have to let this sink in for a second. According to Redfin, the median sales price in the United States is now at a record high. We had the previous record back in 2022. A lot of people thought the market would crash in 2023. It did not. A lot of people thought it would crash at the beginning of 2024 as far as prices go, and it hasn't. What has crashed is transactions. So transactions are still low, and they're kind of stagnant right now. They're not really increasing as much as prices, and mortgage rates are high, and mortgage payments now are at a record. So records all over the place. None of that's good if you're trying to buy a home. Even if you're trying to sell a home to move up into something else, none of that's really good. Just madness, right? Crazy madness. All right, let's go back. Prices are soaring despite the fact there's more inventory than last year. New listings are up 10.2% year over year, though growth in listings may be losing momentum as stubbornly high rates solidify the lock-in effect. Prices are being buoyed by the fact that inventory remains low despite the recent improvement. Demand is holding up fairly well in the face of 7% plus rates, though some indicators are starting to show a slowdown. Redfin's Home Buyer Demand Index, a measure of requests for tours and other buying services from Redfin agents, is near its highest level in about 8 months, but mortgage purchase applications are down slightly week over week. My advice to sellers is to price your home fairly. Even though sellers are getting top dollar at the moment, they should price competitively to attract buyers from the start and avoid having to drop their price as stubbornly high mortgage rates eat into buying budgets. My advice for serious buyers who can afford today's costs is to shop for your dream home and accept that this year is probably not the time to find a dream deal. Price growth may cool slightly in the coming months if mortgage rates stay high, or rates might fall slightly, but overall housing costs are likely to remain elevated for the foreseeable future. Yeah, there's no doubt. If you've been out looking at a home, trying to find a home to buy, I feel you. I feel you, because I'm working with some first-time home buyers and some, second and third-time home buyers right now as an agent, and it's like a savage market out there right now. It's just savage. It's like there's, anything that's good, that is in a decent neighborhood, that's like it's dialed in, the rehab's good, or it's in great shape and the home's been well taken care of, and it's priced anywhere like below the median, it's going to move and move fast, and with probably multiple offers. So been working with a couple buyers that were beat over the weekend because the seller received multiple offers, and we're talking like 7 offers. And we even went in over asking, and we were still beat by someone who probably offered escalation and gap coverage, and who knows, maybe even no inspection, or could have been a cash deal. I don't know yet. But people are getting beat still, first-time buyers, because of, the lack of supply at the low end is just crushing us. It just is. Oddly enough, luxury home sales are up. More on that in a second. All right, so let's look at some of these stats. Daily average 30-year fixed mortgage rate, 7.39%, up from roughly 7% 1 month earlier. Year over year, up from 6.59. That's just it's unreal, right? More weekly average 30-year fixed mortgage rate, 7.1%, up from 6.87%. That's the recent change, up from 6.39 a year earlier. Mortgage purchase applications, they decreased 1% from a week earlier, down 15% year over year. So people aren't, the mortgage purchase application growth is not happening. Even though they said demand is, how did they phrase that at the top? Demand is holding up. Demand is holding up, right? Maybe it is. I guess it is. But if people aren't applying for mortgages, then it doesn't seem like it's holding up. However, I'm wondering if that includes refis. Because if that includes refis, maybe there's less refis now, but more purchase applications. So overall, maybe it's down, but maybe there's more people buying than refining. I don't know. Redfin Home Buyer Demand Index is now down 9% year over year, up 3% from a month earlier. Well, I would imagine it gets higher as the spring comes on, right? Still down 9% compared to last year. Touring activity up 34% from the start of the year. At this time last year, it was up 29%, so that's a delta of 5%. So I guess you could call it touring activity is up 5% year over year. Google searches for home unchanged from a month earlier, but down 17% year over year. People are searching for homes less on Google. All right. Median sale price. Get to some of these stats. Now, these stats are for the top 400 US metros. That's how they get these stats. So they gather the top 400 metros and then come up with the stats. So there it is, folks. Median sale price, $383,725. Nuts, right? Nuts. All-time high, biggest increase since October 2022, with the exception of the 4 weeks ending February 11th, 2024, and the 4 weeks ending February 18th, 2024. Median asking price, forgot to tell you, this is a all-time high as well. $415,925, up 6.7%. All-time high, biggest increase since September 2022. Median monthly mortgage payment, nuts, $2,843, all-time high, up 12.6%, rounded up 13%. By the way, this is at a 7.1% interest rate. I mean, the rates on Mortgage News Daily today, I think at the end of the day, I looked, they were 7.25, I believe. So this is not even where the actual rates are right now, which is unbelievable to think about. So this will even be higher. Like, it's very possible if the median price goes up again next week, and they, in mortgage rates, because the 10-year has gone up a lot, I would imagine mortgage rates could be 7.3, 7.5, creep up to 8% somehow. I mean, this payment could be over $3,000 in a couple weeks. Pending sales, 86,786. 3.8% lower than last year. Biggest decline in 6 weeks. Wow. So people, the number of houses selling isn't necessarily exponentially increasing. New listings, 95,580, but that's up 10.2%. But look at the delta there. It's what's that? Like 9,000, about 9,000 units. So we did gain some units, not a ton, because we're still only at 840,000. And we need about 1 million to be back where we were before pre-pandemic. And even then prices were increasing and inventory was rough. Even before the pandemic, affordable houses were very hard to find still. And multiple offers were still around. So that did happen even before the pandemic. Months of supply, 3.2 months of supply. So 4 to 5 months is considered balanced, but we're at 3.2. It's really still considered a seller's market. That's easy to figure out when prices are up, to an all-time record high. Share of homes off the market in 2 weeks, 43%, down from 46%. That's a decrease. I haven't seen a decrease in that in a while. So, homes are sitting maybe a little longer, or there are more homes sitting on the market longer. Median days on the market, 35 days, unchanged from last week. Share of homes, from last year. Sorry about that. So median days on the market, 35. That's unchanged from last year. Share of homes sold above list price, 29.8. That's unchanged. Share of homes, the price dropped 6%. That's up 1.7 points. You'll see on the chart in a second. That's just shooting up too. Average sale to list price ratio, 99.2%, up 0.1 points. So if sellers are getting 99.2% of what they're asking for the house when it sells. So that's an important point, is when it does sell. All right, let's look at the metro level highlights. So then they take the top 50 US metros and they analyze them and look at who's doing the best, who's doing the worst in different categories. Median sale price, metros with the biggest year-over-year increases. Anaheim, California, 25% increase in median sales price. New Brunswick, New Jersey, 14.9%. Detroit, Michigan, 14% increase. West Palm Beach, Florida, 13.4%. And San Jose, California, 13%. These cities seem to be on the list frequently. They just do. Now, here's what's also, this is just another crazy stat. Median sales price declined in one metro of the top 50 metros in the United States. Doesn't mean if you look at all the metros, it declined in just one. Maybe it did, but what they're looking at is just the top 50. But still, think about all the cities in the top 50, right? Median sales price year over year declined in just one metro, and that was Austin, and that was 0.9%. Pending sales. So when a property goes into contract, then it's pending. San Jose, California, an increase of 14.2% in pending sales. San Francisco, 6.4%. Seattle, 5.7%. Milwaukee, 5.2%. Anaheim, California, 4.5%. And then this is where it dropped the most. Nassau County, New York, 13.9% decrease in pending sales. Phoenix, Arizona, 13% decrease in pending sales. Fort Lauderdale, 12.5% decrease in pending sales. Houston, 11.9%. Riverside, California, 11.4% decrease. Increased in just 9 metros of the 50. So one of the things, let's see here. Now they do new listings. So the thing that jumps out to me right now when I looked at this earlier was new listings declined in just 6 metros, but pending sales increased in 9 metros out of the 50. So it's lopsided, right? It looks like pending sales may be stagnant, maybe even slowing in a lot of metros where new listings actually increased in most of the metros. So there's no doubt that, inventory could be building substantially in a lot of metros across the United States. But there's a catch to that. We'll get to that in a second. San Jose, California, new listings up 43%. Wow. Jacksonville up 29%. Phoenix up 25%. Sacramento up 24%. Miami up 21%. Where did they decline the most with new listings? Newark, New Jersey. Wow. 9.1%. Cleveland, Ohio, 5.9%. Chicago, 4.7%. Milwaukee, 4.7% decrease. Providence, Rhode Island, 4.4%. And Detroit, negative 4% year over year. All right. Now let's get to some of these charts. Yeah. Median sales price, just unhinged, right? Just whoop, straight up. There's not, I mean, there a lot of people thought we would grow. Like I did a video at the beginning of the year that talked about what the different experts and what they predicted for housing growth as far as prices. And there were mixed bags, but overall, I think it averaged out to like 3%, 4% growth year over year. So I'm not surprised that we're getting to the point that we're higher than last year. But the fact that it's a record, that's different because last year we didn't get as high as we did in 2022. So I don't think anybody predicted that. I mean, right now we're 5.2% year over year increase. Now, normally it's 6%. That's like an average increase year over year if you look at the last 20 years or so. But nobody expected that we would just continue to go up, I don't think, to this degree. I mean, a lot of people thought we'd crash completely and burn, but didn't happen. Unreal. All right. Median asking price, 6.7% year over year increase. All-time high. I mean, look at this number, the asking price. So real quick on asking price and this inventory situation as far as why we have a lot of price drops, why we have more new listings, inventories building, but prices continue to go up and asking prices continue to go up. So next week, I'm going to show you some data on my local market as far as, as far as the inventory mix. When I talk about inventory mix, I mean where houses are priced and where the inventory is. So I saw a video this week where somebody was looking at the houses that sold. The majority of houses that are selling now, or a good portion of them, are actually in the higher price point categories. Like, some of them over $1 million. Those houses are actually selling more than they were last year, while affordable homes aren't selling as much. But the part they missed out of that whole analysis is, what does the inventory look like? Because we don't have any affordable homes. So if you don't have any affordable homes, you're going to have a dearth of sales in affordable homes. But if you have a lot of luxury homes, people buying luxury houses are still going to buy. So it's kind of insane to me and misguided to just look at the sales. You have to look at the inventory and go, well, why did that happen? I mean, people aren't just walking past great affordable homes and going, not going to buy, not going to buy. No, right now, people, at least in my market, and I see it and I hear it from a lot of other people across the country on YouTube, you can see it in the comments, affordable homes in good neighborhoods that are houses you can move into and are priced correctly, those are moving. And I think you have to look at that inventory and not just sales. So I think the reason why a lot of these stats are showing some conflicting, they're showing conflicting information when you look at price drops and then you look at the inventory increasing and you look at rising asking price and rising sale price. And if there's just a lot more luxury homes listed and expensive homes than affordable homes, the median sales price is going to rise and price drops are going to be into effect because a lot of people, maybe a lot of luxury homes can't sell them if they're overpriced. So they keep dropping that price. And if there's more overpriced homes on the market, there's going to be more price drops. The share of price drops is going to increase. So anyway, that's my opinion about it based on the market here in Columbus. There's affordable housing is just non-existent right now. Sad. All right. Home buyer housing payments, 12% increase year over year. Nuts, right? $2,843. And people are still buying because they're not sure the home prices are going to drop significantly and they don't know if rates are going to drop soon. So they're like, well, if I can afford it, I find the house I like, I'm going to buy it. Pending sales. Let's look at it. Okay. Pending sales down 4% year over year. Yeah, see, it's kind of sliding sideways, right? It's not really going up. So if this continues sideways, we keep adding inventory. And if we start adding affordable inventory, at a good clip, then yeah, you're going to start seeing, hopefully prices come down. People start buying some affordable homes, drives the price down. But right now, there's no inventory. New listings of homes, 10% growth year over year. Look at that. Right up. Good. Need more listings. Just need the right type of listings. Active listings of homes for sale up 10% year over year. Crazy, right? It's good to see. We just need more growth. Right now, it's not right up in the air. It's kind of still a little sideways. So need more active listings. 3.2 months of supply. This is how long the current inventory will last, how many months if we do not add any more listings and the sales pace continues. It would last 3.2 months. But that's not increasing exponentially. 43% of pending sales under contract within 2 weeks. And that's going up slightly. Homes sold in a median of 35 days. It's kind of like it was last year. It's definitely more days than it was, years before that. Let me look at that, 35 days. So 2022, this was what, 20 days, 21 days? 30% of homes sold above final list price. It's about where it was last year, right there. It's not where we were back in 21 or 22, thank goodness. 6% of listings had price drops. And that's what I'm talking about. When I look at my market, again, I'll show you the stats next week. I couldn't get them pulled up in time, but there's something like a 20% increase in houses priced over $500,000, while there's only a 4% increase in houses priced under $500,000. Not sales, inventory. So if I don't have the inventory at the lower price point, I can't buy the house. And so price drops are in effect because there's probably a lot of really expensive homes on the market and homes maybe that are beat up and destroyed. People can't sell, so they have to keep dropping the price. All the easy money's gone. So if you're an investor like I am, you're not just going to run out and get 3% money, so you can kind of get a dump and kind of roll the dice a little bit. Everything has to be completely calculated, and debt rates are high. So if a home needs a ton of rehab and doesn't pencil out, it's just going to sit. Average home sold for 99.2% of final list price. Again, if you're thinking about, when you look at the affordable home segment in particular, at least here in Central Ohio, multiple offers. I couldn't believe it a couple of days ago. I mean, it was like 7 or 8 offers they got on the home. And we're talking a home in like the mid $200,000 range. So, and it was a great home, great, cute, nice little spot in a great town, and was a great rehab. My buyers were bummed out, obviously. All right. Redfin Home Buyer Demand Index down 9%. Not that we care, right? Okay. Now let's go to the Columbus data. So that was national. Now we're going to go to the local market in Columbus, Ohio. So you can easily go to Redfin anytime you want, look at any metro you want, pretty much. And so I'll go here and type in Columbus. I've already looked at this and previewed it. It's not very good. It's scary. It's ugly. Way to blow this thing up, right? Can I blow this up? Hey, look at that. All right, let's do new listings. We'll do that first. So new listings in Columbus. Whoops, nope. Hit reset here. All right, there we go. All right, new listings in Columbus. I was going to say up 10%. That'd be amazing. That's not true, though. It's up 2.4%. New listings up 2.4%. A whopping 2.4%. Not good. There's just no inventory here. I mean, that's all listings. Forget luxury homes, right? I mean, it's everything. Crazy. All right. Now, let's look at active listings. I knew it. Active listings year over year up 7.4%, but still anemic. Just no growth in active listings. It's pathetic. Yeah, Columbus and Central Ohio is like, we're in for it because Intel has arrived. Demand is high. There's a lot of old inventory, like old houses, 1900s. No new inventory. It's amazing the lack of building in Central Ohio. Like, it's just amazing how little there has been built. I didn't really realize it until Intel came and I started driving around and really looking at the new housing developments, and there's just nothing, especially nothing affordable. So it'd be nice to see some more movement there. All right, now let's go to the median sales price, which isn't going to make me any happier. Yep, there we go. 5% year over year. I think it's going to end between, I said, between 3 and 5% nationally, and I thought 5 to maybe 7% for Columbus and Central Ohio, but I think it could actually go past 5% into like the double digits for Columbus and Central Ohio when we look at the end of this year, because it doesn't show any signs of slowing down. Inventory isn't improving, and demand seems to be just like it was before. So it's definitely depressing if you're a buyer in Central Ohio. Not great. We set an all-time record in Columbus back in June of 23 at 341, but we're right there. We're at 338. So I would expect next week for us to beat a record. Let's hope not, but it may. All right, let's look at pending sales. Pending sales, year over year, 3.2% increase in pending sales. I mean, is that an increase? I guess it is. Not really. I mean, it's a little more than last year, but nothing like it needs to be. But you know, I mean, inventories, you can't buy anything. Yeah, I would think, you know, most agents, real estate agents, realtors in Central Ohio are facing similar things where the demand is there. They probably have some buyers that are trying to purchase their first home or maybe move up even, maybe even some investor clients. I have some investor clients as well. And there's just nothing to find though. And that makes it challenging. So pending sales are lower. And now let's look at homes sold. How many actually sold? It'd be nice if they had this on the national info, but they don't. I mean, down 3%. I'm sorry, down 0.3% year over year. So we're like down. I mean, I didn't think it could get worse than it was last year, but it has. 0.3% down compared to last year. Yeah, if you are in real estate right now from an agent standpoint or, you know, title agency or whatever, I sure hope you own real estate that pays cash flow because you probably need it right now, right? I mean, I'm grateful and thankful that I, you know, purchased some properties that have cash flow that, you know, can keep some money coming in, right? To keep some cash coming in because that's dependable cash. Great dependable cash, by the way. Fantastic dependable cash. But rents, by the way, are going up too. So rents are going up. Rental demands is as high as ever, which is good if you're an investor. But yeah, it's bleak right now as far as the number of homes that are selling in Central Ohio. And the homes are going into contract. So it's not like we're gaining inventory. All right, let's look at price drops. Yeah, just like national, look at that. It's up 1.2% year over year. So it's not up 6%, but it's definitely elevated compared to these other years. And I know, like, I can see it in my own community where their house is priced like at 800, 900, a million, 1.1. And then you see a price drop, right? With those houses, you'll see a price drop, maybe 1 or 2 price drops sometimes. But then the houses that are affordable, no price drop. It sells as long as it's like, you know, able to be lived in. If it's not, you know, if it's completely destroyed, most of those have some price drops too, but A lot of the luxury homes have price drops. All right, let's look at months of supply, which they count as weeks of supply, I think. Down. Unbelievable, right? Weeks of supply, 9.4 last week. This week, 9.2 weeks of supply, which is like 2.5 months, right? 2.5 months of supply. Year over year, up 0.9 weeks. I'm not sure how that helps us. It doesn't. It wasn't really good the other years either. Look at the other years are still really a seller's market. It's still a seller's market in Columbus. It's almost a strong seller's market in Central Ohio. Almost a strong seller's market. And I classify strong seller's market as anything under 2 months of supply. So we're right over 2 months of supply, but getting dangerously close to under 2 months. And that would be awful. Awful. I mean, if they higher interest rates probably is really the only thing right now that's keeping prices from just exploding and going even more insane. So if we had low interest rates right now probably mortgage people, if they're watching this on live or the replay, I know many of mortgage people, they probably hate me for saying this, but like if mortgage rates fall, it'll just destroy any type of, kind of like unleash the beast, if you will. It'll be nuts. Nuts. So let's hope that doesn't happen, at least until we get some inventory, which I don't know how that's going to happen either. All right, let's see. Maybe look at one more stat here. This would be curious to look at. Days on market. No, days. That's not a good stat to look at. That's not going to work. I've never looked at that one. Median days on market. Let's look at that one. So this is how, let me clean this up. This is how long they stay on the market. So the median's in the middle, obviously. I guess we're right where we were last year. Pretty much. Right? I mean, we're right there, 35 days. That's the median on the market. I wonder where we were back in 21. Let's look at that. Same way, same number. What about 22? Okay, way under. 31 days. So, yeah, homes aren't sitting longer, that's for sure. So if you're looking for a deal or a discount, it's not happening here. Just not. Anyway, I'd love to know if it's happening in your market. So comment below. Forgot to say that at the beginning. Please comment below. I'd love to know what's happening in your market because here it's just completely unhinged and unhealthy. Unhinged and unhealthy. All right, so do we have any comments, any questions? No. Kind of a strange time to do a live for me, 9:19 p.m. on the East Coast. Usually don't do it then. But that was the Redfin update. Yeah, again, I'd love to know what's happening in your market. So please do me a favor, comment below, and consider subscribing to my channel. Hit the like button on this live or the recording. And I appreciate you watching. I hope I've been helpful in navigating some of the data going on in the housing market. Again, housing payments at a record high. Home prices, median home prices at a record high. Median asking price at a record high. And it could get worse in the coming weeks, especially if, people keep buying houses, which it looks like they are, and we don't, get a huge jump in active inventory. And heaven forbid rates go up more, you're going to look at even more, a higher median monthly mortgage payment. So yeah, just really rough out there right now from a buyer standpoint. Yeah. So anyway, again, thanks for watching. I hope you have a great evening, and I will see you again on the next Redfin update.